Stocks have been selling off for the past 2 weeks, reportedly for a variety of reasons. All three major U.S. indices are down. So, what is the reason? Some point to inflation. If inflation runs hot enough, the Federal Reserve could take actions that would raise interest rates, and higher rates reduce stock valuations because they erode the present value of future cash flows. Others say that potential movements by the Fed is the reason. If the central bank begins reducing the size of its bond purchasing program, that means bond yields go up and stocks go down. And then there are those who point to already high stock valuations. Of course, there are lots of other potential causes, and it's probably a combination. But to me, it's unproductive to spend one's time trying to pinpoint any cause. My time is better spent figuring out when the pullback will be over. So, let's take a look. To continue with our discussion from the last video, we were taking a look at the triple Qs. So now we're looking at the 6-month daily on the triple Q. Go back here to late November, and through the current time frame, we have a bottom trend line moving up there, and you could put a top trend line here like that. These are not straight lines, but you get the idea. Whether we breach these lines or not is really not all that important. For the most part, we're staying within that trend line, and right now we're testing the bottom. We tested it once here and then once again here. Now, moving on down into volume, the good thing about volume, for the most part, is a declining volume on the downside, but we had a pretty good up day. So both of those characteristics are favorable. Moving into the MAC. Last time we talked about the spread between the fast line here and the slow line here was pretty wide, and I told you we could go sideways, we could go down, we could do a lot of things because of that separation that gives you or gives the market a lot of room for some shenanigans, and it decided to test that bottom trend line once again. But we're trading sideways for the most part, and we had an attempt and a slight reflection, and we're going to have another attempt coming up probably later this week, early next week, and I think that will probably be successful in moving on up and through. Now, this time frame here, at that point there, the fast line came down to test the slow line, and in doing so, it brought the market down quite a bit. So let's go back up here and take a look at that right here. But note that this level was well above this point there. So you could say that we were probably well on our way. I'm not quite sure if this is going to do the same thing, but I would say the probabilities indicate that it is, that I think we've seen the worst of it. Moving here into the histogram, you can see that was the maximum negativity, and we've definitely been improving since then. So it's really not that hard of a call to say that we probably are improving, and we'll probably move on up here later this week into next week. Same thing is showing here with the price rate of change. You see that this is the negative point there. We're much higher now, at least for a few days we're higher. So I think we're going to try to test moving on through that slow line. This was a bit more severe at that point, and I don't think we have the same conditions now. And looking at this level down here and this level here, we're seeing some improvement. Not much, but a little. Enough for me. It doesn't show up here in the RSI, but the maximum negativity does at this point, and clearly this move on down here is well above this point, so things are improving. We're getting near that 50 or midline into the stochastic. I think you can see the chart is improving there, as well as in the Williams. Maximum negativity at this point, and definitely at this level here, showing some nice improvement. Moving on back up here to the price chart, and I think we'll be going sideways or trundling along this trend line here for a while, but I think we'll be turning up relatively soon or soon enough. Maybe not for you, but it is for me. And for today, that's ChewDog Charts. Thank you.